WTI crude oil. Commodities futures. What happened on this day in USA? Brent intact but why WTI fell? What happened to MCX traders that day? Date, 20th April 2020. USA is the largest producer of oil. But US cannot regulate its states to cut production legally. There are about 50 states in USA. Saudis are the largest exporter of oil. Benchmarks of oil quality. To fix the price of crude oil by quality and origin, the following are used as references. i-Brent crude, North Sea, undersea pumped and loaded to tankers for transport on sea. 2 West Texas Intermediate WTI, US oil, Okhlahoma, land, Cushing. 3 Dubai crude, Oman crude and OPEC reference basket. WTI is lighter and sweeter, due to less density and low sulfur content. It is the US oil. All oil in US are shipped to Cushing in Oklahoma by pipes and thereafter are being transported to all places in US by pipelines. There is an extra cost involved for WTI compared to drilling on seas, where they are not directly loaded to tanker ships from the seas. Organization of Oil and Petroleum Exporting Countries, OPEC, and Petroleum Lobby regulate production of oil, thereby regulate the production to supply and finally the price of oil. As overproduction is not done and prices of crude oil is kept high or stable. But the actual demand is so low. 2020 May the WTI crude oil futures are trading at USD-40 a barrel, while June contracts were still trading at $20. 2011, Arab Spring, a similar incident occurred. But in those days while trading oil purchased took delivery. But at present 98% of purchased oil via trading does not take delivery. Location, Cushing, USA is a storing place of crude oil, if you purchase the WTI crude oil futures for delivery. But this location now is full of stock of the WTI crude oil. On expiry day of contract, WTI prices started to move lower and Brent started to move higher. Storage capacities are full and so no one wants to receive more oil. Cost of carry, IT, is the price that buyer wants to pay to stock your physical commodity after purchase. IT is based on time period. The price increases month by month if the buyer does not get IT physically delivered today. But for crude oil, IT is backwardation of prices, meaning next month prices are normally lower or near to present month prices, unlike most other commodities like precious metals or base metals. Capex reduction in IOC's international oil companies. In GCCS, the national companies also reduced their capex for the first time. Not a lucrative industry now to invest. World is striving to switch to green energy. Finally, COVID-19 or the corona epidemic has shut everything including humans to stay indoors. The solutions for the future, change management necessary for the industry. Historically IT takes over a year to recover from such problems. WTI is US oil, now production at 10 million barrels a day. Physical markets vs commodities trading markets, financial markets. Physical markets are a result of demand vs supply of crude oil. Only 30 to 35 million barrels a day is the demand. Demand is depleted right now in Corona area, no flights, reduced transports and production in industries, major consumer of fuel oil. On supply side, production remained same, even after the historic deal on the 13th of April, 2020 to cut production, USA, KSA Russia deal 9.7 BN barrel per day supply. But production does not stop. Demand is low but supply is over and excess with no space for storage. But, in the financial markets on the 20th of April, 2020, on expiry of May contract on the 20th of April, 2020, 11 BN/USD in long positions and ETFs had been there. This was also invested by individual traders. There was no further buyer for crude in US. At closure, IT was made to settle and the prices gone down to highly negative side, while the next month contract values still intact on positive side. This happened only to WTI crude oil futures and not other futures or contracts of oil. Reasons cited: US oil at Cushing. There is transport iron cost and there is no space for storage. Oil production doesn't stop. New use of technology and efficiency of production leads to more production of oil vs demand. On the 20th of April, 2020, in the US the WTI futures contracts opened lower and continued to trade lower until negative values to -$37 a contract till its closure time. The negative values were because of expiry day settlement of contracts on financial market trading, as no one wanted to buy more or keep for rollover to the next month contract. Those holding long sold them abnormally. Due to continued sell of contracts, the price fell from formidable $20 to -$37 at the end of the day. While the next month's contract value still intact on positive side. In the physical market, there is low demand of oil due to coronavirus epidemic world over, with so space for storage at Cushing, USA. The Brent prices were trading higher on the same day but WTI traded lower. These prices normally move together. A similar event had taken place in 2011. In those days trading oil contracts took delivery, but currently 98% of the trading does not take delivery. MCX crude oil scenario. Almost all of the crude oil contracts in India are traded through MCX, Multi-Commodities Exchange. The settlement of MCX contracts are as per NYMEX, New York Mercantile Exchange, front month contract S price at expiry date. The MCX crude oil prices are as per WTI futures of NYMEX. In the US, the Chicago Mercantile Exchange, CMEX, had issued an information on the 15th of April, 2020 that some energy futures contracts of NYMEX can be traded at zero and negative values. MCX does not have the technology software to handle the negative values while commodity trading. Neither did the MCX inform the Indian traders about the same or foresee that this problem could arise. Multi-Commodity Exchange Clearing Corporation Limited, MCX-CCL, is an wholly owned subsidiary of MCX to provide clearing and settlement services to MCX. On the 20th of April, 2020, MCX April contract of crude oil expired. MCX trading hours in India are up to 11:30 p.m. night normal trading hours. But due to coronavirus epidemic the MCX closes at 5 p.m. IST. On the same date in US the corresponding WTI futures contracts open at equivalent time 7 p.m. IST, Indian Standard Time or +0530 hours. In USA, the WTI opened lower and continued to trade lower until negative values to $37 a contract till its closure time. If MCX trading market had remained open, maybe MCX traders might have settled their contracts by 11:30 p.m. IST, that night before zero values. The negative values were because of expiry day settlement of contracts on financial market trading, as not much wanted to hold the contracts for rollover to the next month contract. MCX traders expected that at 5:30 p.m. IST the value was Rs 965 would have reduced to zero as a maximum risk case, and that would mean a maximum loss of Rs 96,500 or Rs 1 lakh, approximate, per lot of crude oil contract on closing or expiry. At MCX 100 barrels, one contract of crude oil and 1 point tick would mean plus or minus Rs 100. On the 21st of April, 2020, MCX-CCL, the settlement price has been arrived at, converting the NYMEX crude oil front month contract's settlement price of negative $37.63 per barrel or negative Rs 2,884 per barrel or lot. Now, the total loss will be 965 plus 2,884, which equals to 3,849 points. At MCX, there were around 11,000 crude oil contracts with long position which remained open and were expected for rollout to next month contract. Therefore, the gross loss as per market experts for the April month open contracts will be around Rs 423 crores approximately. It has a significant impact on the traders and Indian economy. MCX-CCL initially agreed to settle at Rs 1 per contract on the losses, but later on they blocked the amount against deposits by those brokers who held long positions to meet the final settlement with negative values. SEBI has advised MCX to allow traders trade at negative values, but the stage for it is not set now for traders because of technical glitches. The Indian traders are warned that due to recession world over, there are vultures awaiting to snatch away your little amount of savings and thereby utilize them carefully. The traders are warned that due to recession world over, there are vultures awaiting to snatch away your little amount of savings and thereby utilize them carefully. Thank you. And like us if you like. All above notes provided on description.